All right, welcome, ladies and gentlemen. The market is open. Welcome to this week's Power Hour. Hope you're all having a fantastic day. Let's go ahead and make sure you all can hear me. If you please type the number 1 in the comments section, that chat box. Let me know that you can. I would greatly appreciate it. All right. Good afternoon, Jim and John. Morning, Kevin. Hey, Erica. Brenda, good morning or afternoon. Hey, Will. Hope you're doing great. Yeah, Will, I'm better. Thank you. For those of you that didn't know, I was walking the dog last week and crossing the street. And my dog is old, man. He's 13 years old. It's like friggin' 90. And we're crossing the street, and some idiot from the high school kid took a turn, almost took us out. I literally yanked him 3 feet in the air. He was just flying. He ain't flown in a long time. Jumped back myself, hit my back on the curb, and messed my back up. I went through about 5 or 6 hours of stretching between that day and the next day, trying to get some of the tweak out. And I'm already in physical therapy for my back, so from moving furniture a couple of weeks back. So it wasn't fun, man. It was not fun, but better now. Thank you. Thank you. All the emails that you guys sent, some made phone calls to the office when they heard what had happened. I greatly appreciate it. I announced it in a pop video because I got on pop. Normally it's, hey, how's everybody doing? And I got on pop and go, hey, just so you know, my energy level is going to be like this today, and this is why. And thank goodness it was a Tuesday where it's a little bit shorter video. But yeah, I appreciate all of the, there you go, Paula. Not how are you doing, Rob? Not good to hear you're okay. How's the dog? Sparky is doing well. Thank you. Oh, Paul, I'm teasing. I'm teasing. I would ask how the dog is too. Sparky's doing well. It actually got to a point that I didn't even tell my wife because she would have had a heart attack had she known what had happened. So I just found it not beneficial to let her know what was going on with that. So, and since I'm already going through physical therapy for my back, she didn't think anything of it as I'm doing all this stretching. I'm like, yeah, no, I just really got to get this. I'm going to get it. I'm going to get it. I'm going to get it. Right. And it's not even my back that's hurting me from that I'm going for PT for. It's my sciatic nerve, which started with my back. And then the back hurt again from that. Acupuncture helped as well. I went the one time for acupuncture. That was a big deal as well. So she knows now. Yeah, Brenda, she's not watching, so it's all good. She's in work right now at the school she teaches at. So, nope, we're good. She'll never know. I'll never tell her. And if she says, oh, I heard this, I said, no, I was lying. There's no way I'm going to let her know that. She doesn't need to. All right, as we get started here, keep in mind that everything we look at is for educational purposes. Nothing's meant to be advice or recommendations. If you like any of the candidates that you see or anything that you see out of here, you need to make sure that it fits your own personal risk profile and risk tolerance. It should not be something that you jump in and just take a trade because I'm giving you a candidate or because you hear about a new strategy. Make sure it fits your personal risk profile and risk tolerance. All right. We have a lot coming up. Inner Circle coming up. The check-in is the 27th, which is today, right? So that's this evening at 7 o'clock. Mastermind tomorrow at 8 o'clock. Wealth with Spreads. These are all coming up next week then or the week after. Wealth with Spreads, Trading You, Patterns in a Flash, Weekly Whisper Q&A. We're doing those together now. So Patterns in a Flash, Weekly Whisper, we're doing one Q&A for both. So if you're in one of the trainings, you're getting both of the Q&As at the same time. Power Hour Trading Coaches Playbook on their regular schedule. You may notice something in here, Crushing It with Volatility, right? This is a brand new addition to the calendar. And yes, sadly to say, or sorry to say, or it is what it is, it's today at 8 p.m., right? Sean was, we've got some relationships with other education companies out there. So Sean did some trainings, right? He was on with another coach's students. We put out a link for them to register for Crushing It with Volatility, and that class is tonight. So, and this just happened, I think, on Thursday. So we didn't have a whole lot of time to get things ready on this end, but we do have that ready for tonight. So, Miguel, if you could drop that link in, it looks like he already did. he did. Guys, don't fiddle around with it. I don't even know if we've got it on the members page yet or not, but it is this evening. So go ahead and click on that link, get registered. Miguel, you'll drop this in at the end of the class again today, because we always get some other people that straggle their way in. And of course, we've got the last Key to Be Free coming up, which is the 29th, also at 8 p.m. That's Wednesday. And then top 3 trading strategies coming up on April 3rd. We've got a lot of free trainings coming up over the next few weeks. So keep your eyes open for that. Power option plays, E-mini, covered call explorer, Vega spreads, all on their regular schedule. Right. And here's our follow us page. Make sure you're following along with all the latest and greatest that we put out there day in and day out on the various content. Go to Trading Like a Boss, which is where you can register for Power Hour and Trading Coach's Playbook and Key to Be Free. And most all of our free trainings are published and posted up there. Right, here is our Trading Boss Manifesto. Download this off of our main website, off of wealthbuildershq.com. It's right on the homepage. You don't have to be logged in. You can just go there and download it right from there. And guys, this is what, to me, I spent hours on this, having my writer tweak it for wording purposes, going back and changing whatever, I needed to. But I spent hours working on this manifesto of what it meant to be a trading boss, right? What does it mean for you to be a trader with Wealth Builders, right? To me, right? What is it we're trying to accomplish? And I think we did a really good job of hitting the nail on the head with this. It definitely was a team effort. So I definitely appreciate everybody's input for that. And there's the Key to Be Free, folks. Last one. It is the last one. We've had some eye-opening scenarios come out of that. Some of the conversations that have taken place since this trainings, I've done 2 of them, have been very interesting on where people thought they should be and realizing where they need to be now. Has been fantastic. So, all right, let's go ahead, and I'm going to bring up the S&P 500, and we're going to talk about the market. Let me see. I've got a couple of questions in there. Yeah, Helen said, I know what you're going through. I'm having the same problems. Yep. I appreciate the understanding there. Jim said, thank you for the Traders Market Intelligence Report video. Good video. Yeah, it's it's funny. I don't do a whole lot of prep work for it. I don't, with the exception of if I have an option that's expiring Friday that I have not closed out. I've always, when it was monthly options, with the exception of expiration Fridays, I was off during the week as a trader. I didn't trade on Fridays at all. Fridays, life is very busy running Wealth Builders, trading all at the same time. By the time Friday comes, I'm done. I'm wiped. I'm done. So I try to be finished in my office with trading and any Wealth Builder stuff by 12-ish. I walk away a couple hours, come back at 4 o'clock and do the video for the Traders Market Intelligence Report. I don't really prep for it. I look at the S&P 500. I look at the VIX, a couple of key stocks. I look at the Fed updates, and I know exactly what I'm going to say based on what I see, because I've already got opinions of where I think the market goes and all of that. So it's a great training, folks. I hope you're taking advantage of it. And I know many of you are. That's actually our number one opened email every week is the Sunday update, which is our has the Traders Market Intelligence Report in it, which is our videos and all of that stuff in there. So I'm glad you liked it, Jim. It's a lot of fun, labor of love for sure. And I don't mind the fact that I spend, for an 8-minute video, I spend 12 minutes to do it and I'm done. Anything to get it over and get done without spending more time is worth it for me. All right. So let's go over and take a look-see, if we could, at the SPX. Okay. So, look at it today. All right. Come on, baby. There we go. All right. So I have a drawing tool somewhere around here. There we go. Let me grab that. Okay. So you can see where the fib started and where the fib ended. That blue line right there, right? That 0 line. Okay. This black is the 4181 level. Major Fibonacci level. Go run a Fibonacci number series, and you'll see that this is on the Fibonacci number line. We had this pullback that violated the 882 in there, right? We put in a new swing low, then we had a new swing high, right? Higher swing low, another higher swing low in there, right? And this is so far because we're not closed today, so we don't know if that is or not. But we had this gap up today, right? And life was good. It was a bullish candle. The candle actually looked like this before, right? And now we have pushed back down near the lows of the day. Am I surprised? No. A lot of this came from First Citizens, I think it is, First Citizens, buying up some of the major assets from SBV Bank, right? And they got good contingencies with them. I'm sure they were well protected on any debt and so forth in there. The only thing they didn't buy was the securities type things that they had. That part of the business they did not buy. There's been a lot of FDIC monies paid out already to cover some of this. So because of the losses that are in there. I did watch one banking official last week talk about banks failing and all of that. And his words were, SBV Bank was a very unique situation. We do not have, you ready? We do not have another bank today in the same scenario that they are in. And he knows from, I guess, what the regulations on the banks. I don't know. But according to this guy that, we are not setting up for this, that, this is all smoke and mirrors. It's the press making a big deal, keeping it in the news, keep bringing it back. Right? To make it worse, I have a show that I DVR'd, and it was the, oh my God, commercial time. The market's crashing because of what happened with a Silicon Valley bank. Come and watch this at 10 p.m. tonight at the news or whatever it was. It's like, come on. Yeah. I've even got to catch it back on replay. But overall, that news drove that stock up $27 or something today at one point I saw. And I don't know where they are right now. It's actually a 5-letter tickle symbol, ticker, whichever one works for you. But they were up. I'm guessing they're up nowhere near that at this point. But that was the catalyst for the market, right? It's just great news. Okay. So they bought up the assets. What does that mean? The government's not going to eat it? Who cares? Think about it. It's only money. I mean, it's only paper because we have nothing backing it. The government will just print more. Don't worry about it. Right? We're already in such bad shape with what the value of our money is. It's crazy. It is backed by the full support of the government. Do we trust them with the debt that we're in right now? So we get this pullback today. Realistically, what we're looking at is this. Let me go ahead and bring it in just a little bit more. Right? So if we take note here, let me get rid of the crosshair. Go back to the drawing tools. All right. So if we take note, we had a swing low, a higher swing low, and now what looks like right there, that higher swing low. Right? We had a swing high. We now have a lower swing high. Right? And this, not yet, but could potentially, if we get another bearish day tomorrow, could be another lower swing high. All right. So now we're in somewhat of this wedge formation that's going on over there. And that's where the concern is right now. If I have a descending triangle, what does that mean? My tops, my bottoms are holding and my tops are coming down. Right? Descending. The pattern is descending. It's moving downward. If I have that, the expectation is a break to the downside. We'll call it roughly 40%. From where the pattern started. If I have an ascending triangle where my bottoms are going higher and my tops are holding, so the tops are here and I push into it, next time down I don't go as low, I push into it, next time down I don't go as low until the expectation of a breakout. If I have that, I've got expectation, bullish, bearish from the pattern. When I have this wedge formation where they're both moving angular up and down, right? Lower highs and higher lows, we're expecting a breakout. Which direction? Yes. Yes. We don't know which direction, right? We don't have an answer to that. We don't. So what do? We've got to watch the pattern as it forms. And that's exactly what's setting up in here right now. We've got to see how far it goes. And then more importantly, does that pattern actually break out where it needs to break out to give us the best opportunity in that trade setup? So there's a whole Well, let me ask. Okay, Brenda, I will do swing high and swing low for you again in a moment. Okay. So let me ask you a question. If I go ahead and do a drawing, an analysis of some Fibonacci, an advanced fib tool, I'm going to tell you right now, for many of you, you're not going to get the full weight of exactly what's happening. You're not going to grasp everything that I'm doing. Give me a 1 if it's okay, 1 for yes, that I draw, that I show this, even though you might not fully understand it. Give me a 2 if you're like, not enough. I'm not going to fully understand it, then don't bother. Excuse me. All right, ones. Yes, Jim. 1, yes. 1. Okay, yes. Got it. Okay. All right. So normally you would use this tool on off of a fib pattern where you've got a Fibonacci drawn already, but we're going to look for trying to remember which one it is now on this computer, Fibonacci time ratio. And I'm going to start this time ratio where the pattern started, which is right here, right around that candle. And I'm going to drag this out, the other blue line, to the day the pattern ended on there. Okay? For the why does this look like it's not set properly on this? Hold on a second. Let me see something there. All right, let's try one more time. Nope. All right. I don't know why it's not functioning the way it is supposed to. But what we are looking for, set the whole dang thing up, and I don't have the tool set up. Again, I'm not on my computer at home, so it is a travesty. All right, that's why. Okay, so I've got to put these 2 lines in place first. All right, now watch. So you're going to draw off of the 2 highs and off of the 3 lows. There is what we have. It's as many highs and lows as you have is you're going to connect the dots. You can look for that intersection right there. All right. I don't know why I was thinking it should be drawing the intersection for me. We're going to start where the pattern started, which is right here. I'm going to move up higher than it though. We're going to draw this blue line out and end this pattern right here where those 2 lines intersect as close as you can. We're off by a day somewhere, or not a day, but they don't line up exactly. So just get it whatever is the closest, okay? And there is a 382 and a 236 line drawn in here. Those are the only 2 lines that I care about, those 2 black lines, right? So now let me make this a little bit bigger. That's as big as I can get it. And let's go grab the drawing tools. We drew off of this starting point right here, which was the swing high. We drew off of the high. And when we wedged this together, we ended at that convex there, or where that little point is, where those 2 lines intersect. That's where we ended. This is 100% of the move, right? Is what is expected to be. The distance between here is 0.236 and 0.382. That is not a perfect number of the percentage in there, but it's like 39% and 24%. So somewhere between 24 and 39%, 236, 382, we're right there. Somewhere between there is where we need to see the breakout take place. So what does that mean? What does that represent for us? Well, I need that breakout to break up or down between these 2 levels. If it breaks out in there, there's a very high probability of the pattern performing the way it's supposed to perform. On a wedge, it's slightly different than an ascending or a descending triangle. And it doesn't matter, up or down makes no difference. I don't care about bias. It doesn't matter. None of that means anything with the pattern component. But if we break out inside of here, then there's a good chance that we put in, so the breakout to the upside inside of these 2 lines, let's say, there's a good chance to put in a higher high. If we broke to the downside here, there's a good chance to put in a lower high, right? If it happens between this 236 and 382. If it happens outside of there, if that same breakout takes place, but doesn't take place until somewhere beyond this 236 level, negative 236 it is, but the 236 level, if it doesn't happen until beyond there, what we're looking at is the stock is pulling into that cone and we're getting this tighter wedge forming. And usually we just kind of peter out to the downside. We get a little bit of a lift to the upside, but we don't get a breakout either up or down. We tend to just get blah along the way. Okay, there you go, Trader Will. So just looking for the golden nugget. Exactly. Right? We're looking for it to happen inside of there. All right. So now let me ask the question. 1 for yes, 2 for no. How many of you felt that you got the gist of what I was talking about there? You may not fully understand it, but you got enough to say, yep, I know what you're talking about. And if you didn't, give me a 2. Let me know. Trader Will said, I use this a lot. Yep, me too. 1-ish. And that's okay, Erica. Brenda said 2. Fully understand. That's why I said it right up front, folks. Some of you are just not going to get this. And it is because it is an advanced technique that I could spend an hour on just teaching this technique with this tool, right? Which obviously I don't have an hour. Trader Will said, didn't this come from Monster Market Movers? Well, I may have talked about it in there. Well, if you mean the pattern itself, I've used this on fibs before I ever taught Monster Market Movers, but I have taught it in there before. Yes, absolutely have. Karen said, wow, I've never seen that. I've heard about the 2/3 of the pattern. Thank you. There you go. So guys, listen, there's other ways that people look at it. Okay. There's other ways that individuals, that traders look at other numbers and make determinations of yay or nay, good or bad, is it going to work or not work, based on their own experience, their own knowledge, and so forth, right? I'm not poo-pooing anything. I was at a live event with Ryan Litchfield and a bunch of other coaches were there as well from the same company that we were teaching for. And Ryan gets up on stage and we had a massive move in the market. Google had went up like $200 or something from their earnings, $150, whatever it was. And Ryan goes up and says, listen, if you were using Bollinger Bands, and he starts showing the Bollinger Bands, he goes, you would have done this and it moved to there, you'd be out, you made X, blah, blah, blah. He goes, if you're using Rob's Fibonacci's, you know, it did this and look where it ran to, right to that level, boom, 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 you made money, you're out, good to go. Ryan goes, I am a bracket trader, and if you use my brackets, it did this, it did that, it moved here, you would have been out and you made money. Ryan said 3 traders, 3 completely different systems, and all 3 of us got to the same conclusion using different tools to get there. I'm not saying fibs are the only way to get there. Well, maybe I am. No, I'm kidding. They're not the only way, right? Are they the most powerful way? To me, they are, without a doubt, right? Absolutely, unequivocally, without a doubt, right? When you get into that cone, right, when you're petering out and you're getting smaller and smaller into this cone area here, in here, and you don't have momentum enough to drive the position up and down any longer because you're kind of right? Small drop, small push up, but not enough to say, yes, we got some momentum behind this, right? Darlo said, so is this good strangle territory? Darlo, here's the problem. Strangles work awesome until you get news comes out, right? And then it just messes everything up, right? So could the strangle have been messed up today on the news of First Citizens buyout? Maybe. I don't know, right? Could Janet Yellen open mouth insert foot again the other day when the Fed was driving the market up and she's speaking and driving the market down? Maybe. So you just got to be careful with some of the uncertainty out there. Paula said, what is the name of the tool that I used? So it is a Fibonacci time extension. Nope, wrong one. Keep doing that. It is a Fibonacci time ratio. Right? And here, you know what? Let me do this. I'm actually going to delete all of those lines off that I drew on there. And when I open it up, Paula, this is what you need to have in there. I don't care about any of these lines. Actually, here, let me do it this way. I don't care about any of the lines that are red. I only care about the 2 black lines and the 0 and the 1. Although the red 5, 1, 1, 2, 7, 2, they have different purposes to them, right? Negative 3, 8, 2, negative 2, 3, 6, 0 and 1, and negative 1. They are the only lines that I need to have on there are those 4. Other than that, I don't care. All right, so set those up that way in Omega charts. If you're using another program, I can't tell you what to use because I just don't know how they set it up. I don't use this in a trade station very often. They have a tool like it. It's a little more cumbersome to use. Let's get rid of that. Make sure we only hit delete one time so we don't mess anything up. Brenda said, would you do what you just did one more time, please? Sure, Brenda. Very quickly, though, right? I'm going to draw a diagonal trend line. And, of course, you guys can go back and watch the recording of this on the swing highs and the swing lows. I am looking for the intersection where these 2 lines intersect. All right? I'm going to grab the Fibonacci time ratios. I'm going to start where the pattern started. That was our swing high right there. I want to go up higher than that, though. Don't do it right on the candle because your numbers are going to get messed up. I'm going to drag it out, and a blue line, you can see these are my choices. I could be there right before it, or one more day over, I could be just slightly past it. I like to slightly past it by a day, so we're going to go there. That's it. Somewhere between the 382 and the negative 236, that's the breakout zone. I don't have any thinking to do about it. It's very visual. It's there. We're only talking 2 or 3 more days, I think, in this pattern. 1, 2, 3 more days is all you have for the breakout to take place. All right. I hope that helped. All right. Let's see. Yeah, so I still have all of my Fibonacci treasure map stuff, Jim, and all that. Someday I'll do another Fibonacci series, but it's going to be like a 2-day training. You're welcome, Paula. On TradeStation, it might be Fibonacci time extension lines off the drawing tool. It is. Numbers at the bottom are the days. Yep. Good, Brenda. And guys, for swing high and swing low, in case you are confused on swing high and swing low, let me share with you what that looks like, okay? So if we're looking at a swing high, here's a candle, right? Has a wick, doesn't have a wick, it really doesn't matter. Here's another candle. Again, size of the wick doesn't make any difference at all. All right, we'll call that a bearish candle. It's got wicks on both sides, whatever it is. All right. On this candle, you have a high, H. You have a higher high, and then you have a lower high. 3 candles in a row. That makes this officially the swing high. Turn it upside down for the swing lows. All right, excellent. Good. You're welcome, Brenda. If there's any questions that I missed in there, folks, just drop them back in. I will be more than happy to talk about it. But look at the moving averages. We've started to get into this little bit of a sideways, not fully sideways, but a little bit of a sideways pattern, right? We're seeing some flip-flop on the 233 and the 89. We're not getting as consistently as we were when we had that nice breakout from one to the next. So a little bit of caution as watching the S&P with the news that's coming out, right? Even to the tune of the trades you're taking, which we're at that point now. Drop in the trades that you guys did today. You could have done them as non-funded or funded. I don't care. It could have went against you. You could have broke even. You could have made money. I don't care. What I care about is that you're doing the trades, that you're hitting enter. You're doing trade after trade after trade after trade. Yes, you will not get any better at this unless you do non-funded trades, paper trades, practice trades, whatever the heck you want to call them, right? But please do not come to me and say, oh, I've done 6 trades and I can't get this right. Really? Well, I don't have the answer to that other than you're not doing enough trades. So what did you do? Drop them in. Let's see. John said, Wheel of Fortune, Amazon, naked puts on Intel, Beyond, Iron Condors, Rut, on iron condos on the rut. Cash flow $1,000. Crushing it, baby. Great job there. Brandon said no trades yet today. I love that. Yet. Hey, Charles. So Charles, if you're not seeing the fib time ratios on the left side, the right side any longer, come up here to this gray bar, the upper gray bar. At least it is on mine. Right click on it. Scroll down to the drawing tools. It's candlesticks, drawing toolbar. Wheel your way down in there and look for the Fibonacci time ratios. Fib time ratio. And then just put a check mark in it. And if it is checked and it's not showing, I would say just give the guys at Omega a call. It could be that you have too many tools and it's off the list as well. But that's where you'll find it if it's not there. Good, Charles. Got it. Excellent. So Deborah said, I'm in ACN, still going. All right. Excellent. Nice. Trader Will, 32% on the Qs. Yeah, I love it. It's so cool. Yeah, that video was interesting to make. That's for sure. I liked it. It was a lot of fun. So this morning I gave Roku out as a candidate. For those of you that are not getting the market mornings and checking it out, you need to. Let's see. Erica said, I'm in a debit spread. I'm in Meta, debit spread, and Roku. Nice. So I did a trade on Roku. Let me get my chart here. So here's Roku. Roku had an announcement. I think it was an upgrade of some sort today. They gapped up. I listed this one as a credit spread and or a directional option trade. And I defined a directional options trade as a naked put or buying a call, buying a put on the position. The naked puts had really sweet premium on them this morning for Roku. So I did the 60 put for $1.25, right around there, like 128 or something like that. Call it $1.25. And got out of them as we started to kind of fluctuate around in there, and we're kind of bumping our head and starting to fail. We broke that 8 moving average. Done. Done. We got out at 55 cents. So what is that? 45 and 25, 50, 70 cents. So 70 cents in that trade for just a couple hours of work, right? The credit spread would still be working fine had you done a credit spread on it. But the naked put gave me some really good premium on it. I didn't like anything I saw for a pivot trade on either Qs or SPY today. So I passed on that. The lines were a little tight at the level from where we opened. So it really was not for me. Let's see. But overall, nice rate of return on it. I'm happy with it, and life is good. Some of you have seen, if you've watched, those of you that are in power option plays, you see the numbers that we're doing in there, where we're up, a couple hundred grand, 333 grand for the year or so. Non-funded trade, of course, but we're up 333 grand right now. I think it's 333,900 actually, but and we're consistently finding 5, 6, 7, 8 trades, every half week. So we do an update on Tuesday, which is Monday, Tuesday, and then we do an update on the weekend, which is Wednesday, Thursday, Friday. So between those, we're winding up with 10, 12 trades right now a week, maybe 8 trades. Call it 8 to 12 trades in a week. And I'm very pleased with what our results have been so far. Even though we had 3 of our 7 trades between Wednesday, Thursday, Friday, 3 of them had gone against us. So almost half the trades went against us. We still came out, I think, about $5 grand ahead for the week. So, for that half of the week. So I'm good. I'm good. And there's a reason for it. You got to be able to trust your system. All right, let's see. Charles said, I've got my double tap on 195 line to the downside on Tesla. Still in. Okay, good. Nice. Erica said, Roku and NVIDIA are my favorite stocks to trade. So, Erica, for me, right now, and I did this on Power Hour a couple of weeks ago, my 3 top are Tesla, Netflix, and NVIDIA, right? I love Roku, but my three top are Tesla, Netflix, NVIDIA. I still trade Roku all the time, right? But those three are ones that I really, really, really know the heartbeat of that stock. I really have a good handle on how to trade those individual companies, right? And I say that every morning is if a stock comes up that is on our power option plays list, that I will consider a directional trade on there. And you should only do that on any of the stocks if you know that stock. If you don't, then a credit spread gives you a better chance of being right. You're getting paid. So it doesn't have to move up or down. It has to move in a direction. But so if I do a credit spread, right? A bull put spread, if it goes up, I make money. If it goes sideways, I make money. If it goes down a little bit, I make money. I only get in trouble if it goes down a lot. And if you really know how to handle the trade and you manage it properly, you could actually make more money by being right. I mean, wrong. By screwing it up. But you really got to screw it up. You can't mess it up a little bit. You really got to screw it up. It's the only way you can make a lot more money. All right? Okay. What do we got here? I think we're all caught up there. All right. What stocks do you guys want me to take a look at? Drop those in and we'll jump in and take a look at those. Jim said, I listened to your Market Mornings video this morning. Thank you for this. Oh, let me slow it down because now you guys are putting symbols in. I can't see it. On PXD chart, the one line is on the high of 6.7. Wouldn't you want it on the high of 6.8? I might have been off by a day, Jim, but if it is higher, yes, I would have. Yeah, so 10 months old on a chart is where we're starting to get to that point of it's getting a little bit old, but yes, we would want to redraw if not. So you are right, Jim. Okay. Kevin's asking for Roku there, but you're down. You were the last one in so far, Kevin. So I just saw Roku as I scrolled from there to get back to the beginning where I cut everybody's symbols there. So let's go there. Let me bring up Omega charts. Let's see. Karen's asking for Tesla. Oh, you know what? Let's get the entire list of stocks. Tesla. All right. So I saw something with Tesla that the source code or the algorithm, someone had leaked it on the internet. It has something to do with Twitter. So, Musk is not a happy camper right now from what I'm understanding at all. Okay. So not one bit. All right. So right now, Tesla, we're looking at an upside of 200, a downside of the 8 moving average, which is 189, maybe down to 181 on Tesla. Charles, sorry, I jumped right over Karen with PANW. I don't know why I mixed those two up. My bad, but Karen, I'll do yours next. So on Tesla, Charles, again, I like it a lot. You got room up to 200. That's $9. There's plenty of opportunity to make some cash in there. Right? I'd have to break the 8 and 21 for me to want to take the downside, which would be 181. All right. So that is Tesla rather. PANW is next. So PANW, we got a little bit of a bounce in there today, but look at the last 5 days. We're just kind of pinned in. We're getting those lower highs. This is that wedge we talk about, right? The highs are going up. And the tops are holding. We only have one top up there, 2 if we count the day before that, which was Thursday and Wednesday of last week. But we're looking at 196 on the upside. If we do break, Karen, below that 191 level, I'm looking at that 186 back at the 618 line for the next downside target. All right. All right. Brenda I hope that helps so far, guys. Brenda's asking for Apple. Let's do that. All right. Okay, 327. We've got the last candle in there. So same thing. 5 days sideways there. Nothing really happening. We're not really following the moving average. Moving average just was going up and today just decided to go flat. right? Deadline, right? Just boop. So let me pull this out a little bit. But we are looking at that 157.5 as support and 161.5 as resistance. So we're kind of tight in there, Brenda. You just got to be okay with those numbers. I'd much rather see the breakout up or down, but actually, I'd rather see the breakout up. Down, my fibs become too tight. Yeah, just a little too tight there. All right, let's see. That's Apple. Brenda's also asking for spiders, SPY. Okay, so SPY, see guys, this is why we gapped right up to resistance and pulled back. You know, we pulled back, and we're only up 61 cents right now from yesterday's close. So we don't have a lot of movement in there right now at this point. I really needed to close again higher, which means above, not above the high today, but above the 396.54 level. I need to close up there. If we can get a close up there, even though we had pulled back from where we were, that 400 is the next resistance line, which I'm okay with, that 400 level. Okay. To the downside, we're looking at the 396.54. And then the 8 moving average, which is 394.5. Right. So not excited about downside move at all. And then QQQ is our next one. Let's see. Let me get a bigger picture here. All right, fib is good. We broke above the 618. So Brenda, I really want to see the break, the bounce rather, off the 309 level up to 318, 319. You got a $10 move to the upside there. So for me, I would probably scale out of half the trade about the midpoint, give or take, which is where the recent swing high was back here. So powerful stuff, right? Very powerful. That was Q's. All right. And then next is AMD. And that was Trader Will. All right. Man, we definitely need a new fib. I just don't know if it's going to be big enough from this move alone. Actually, it's fine. 86 to 89 is at least $3. So we're okay. Let's see, 96 to 102. That gives me $6. Where are we at? So we're at 8. All right, so we don't need a fib in there. We won't need one on the top either. So Will, I like where it is a lot. It's right at that 236, that 96.12. Close here, push back up above. You got one or two ways of handling at 100. As you're moving up, Will, into that 100 level, you could either pull the trigger and get out of the trade, of course, or bring your trailing stop up very tight. So if it does pull back, you get taken out of the trade. You'll give some back, but you take the opportunity to run up to that 102 half level if you're right and it does continue to push up, right? So there's the next piece of that puzzle, all right? So I like AMD a lot with where this is sitting. All right, now Kevin asked for Roku. Jim, you're welcome on PXD. Trader Will, you're welcome. Kevin said, I bought a put this morning and I'm up 60% right now, looking to get out at 62-ish. And, I don't know what that means as far as numbers, but if 60% means you're up 80 cents and 62% means you'll be up 86 cents, you may want to say, you know what, I'll be okay with 80% without it being an exact fib and just pull the trigger and get out, okay? But you bought a put this morning, okay. This was on, let's see. What am I doing here? Sorry, I'm just trying to catch all of where I'm at here on the list. All right, it is Roku. Got it, okay. So on Roku. So what I'm looking at there, Kevin, is we definitely have some room down to that $60 level. Right now, we trade 20 contracts on any stocks that are under 100. So good, bad, and indifferent. If you're right, man, you crush it. If you're wrong, ouch. One of these yesterday cost us, from the end of last week, cost us $3,500 on a Roku, PayPal, Square, on those priced stocks. So you got to be careful with the number of contracts there. But 61 on the downside, 60 down on the downside. On the upside, I needed to close above 63.5, and then 66.86 is resistance. And we've been there multiple times. Nice. Woo! Charles, I love it. Just got the alert on Tesla, $1,800 profit. Crushing it, baby. Great job. Great job. $1,800, folks. There you go. It doesn't take much. One trade, right? Just one trade away. I say it all the time. A lot of kudos there, Charles. I love that you guys are doing this without me asking for it. A lot of kudos. Let's see. AMD. PK, so could AMD be a switchback trade? Yes, it is. It absolutely is. But it has to, remember, what are we looking for, PK? It's got to close there first. Then and only then can we get a switchback to work. It has to make a close at that point before we can take a bounce or whatever from there. Now, if you wanted to take it as an intraday close, you could do that. You just take on a whole other list of inherent risks by doing it that way instead. Right? There you go. Charles said, nice having great coaches. Much appreciated, my friend. Listen, stay off those airplanes that the wheels don't stay on, all right? You're welcome, PK. All right, you know, I passed right up and didn't talk about trading the Fed decision. Talked a little bit about the market, S&P 500, but we didn't talk about the Fed and what's going on there. So we'll kind of wrap it up with that. Right now, Powell came out and said, we're raising a quarter point. Beautiful. Quarter point hike. I've been saying it. I've called it. This is not this. Okay, this is just 26. I counted the other day. It is now 26 years, March of 1997. 26 years ago, I started in this month of March, 1997. Learn how to trade the market. It's that 26 years of experience is all it is. Okay. And I feel like it's more like 50 years of experience with how accelerated I've done some of the things that I have done, how much of it I have done. But regardless of that, I thought that we're going to continue with the push to the upside. I couldn't see the pullback on there and the pressure from the market to say you need to not raise rates. The banks, my wife and I had this conversation earlier where, and I think I said it here, where one of the gentlemen talked about no other bank is in the same position as SPV. So, or SVB. So we don't really have that issue with banks going to fail. Now, if we have another one fail, that will, definitely trigger something. But I think that the Fed tools that are out there will help, right? They've got other tools that they can use that Powell can reach in for, right? Market was actually going up on that quarter point hike. Yellen got in front of Congress and started talking, or yelling, I don't know what she was doing, but, and the market collapsed on her conversation, right? Not the first time that's happened before. Happened big time as a Fed chair many years ago when she was. So right now, when we look at the Fed decision, folks, I am not a believer that we're done yet. And here's the problem. When I say that, do I think the Fed should be done? Yes, I do. But we have not been able to curb inflation at this point. We've not seen unemployment come down. Economy is strong, and that's one of the people on Congress pushed Powell to say your job is to make people lose their jobs. Powell didn't want to answer it that way and did not. He was very diplomatic the way he beat around that bush, as he should be. It's not that his job is to make people lose their jobs. It's to keep unemployment at a certain level that it is a feasible number. When you've got 2 jobs available for every one person looking for a job, it's just not good. It's not good. And I'm all for fair wages, every bit of it. Everybody should get paid a fair wage. But you can't, out of one side of your mouth, ask that we pay everybody fair wages, and out of the other side, complain that everything's gotten too expensive. Because when you increase the wage, we've already seen massive increases in price of materials, right? And you do that, and now you look at the other side and say you shouldn't raise the price. You can't. And are there some that are raising too much? Yes. When there's a restaurant that we go to, a Mexican restaurant that's in the area, that my favorite dish was $12 pre-COVID and now it's $19. Yeah, it's good, but it's not really that good. It's not. Okay. They beat Chipotle by a little bit. $19 to get this one dish. Was it warranted? Was he too low before? I don't know. I don't know the answer to it. But when you see price hikes like that, you look at used cars that they said used cars aren't going down. You're not going to see that happen for a while. They're going to stay where they are because the new ones are too expensive. The average new car, $43,000 or $48,000. The SUVs are over $60,000. The hybrids are through the roof, right? Pricing is just whack right now. So the thing you want to be looking at when it comes to the Fed is very straightforward, very simple. Okay. You really have to make it very much a data-driven trading environment for yourself. You can't be picking beliefs of, I believe that 6 months from now, this will be over. Listen, you might be spot on, man. We got you as the next CNBC analyst. You got a Pulitzer Prize coming to you, right? Awesome. But we don't know. If both of us, you and I, whoever's out there, if I said the market's going to go through the roof in 6 months, and you said the market's going to crash in 6 months, right? Someone else said market's not going anywhere, right? One of us are going to be right, right? So does that make us a guru? No, it's just opinion. We don't have enough data to tell us where the market goes. Do I still think we're going to see another rate hike? I don't think the Fed is done. Now, it's early yet. We're not coming another rate. Next one is 6 days away. It's May. We're not done. We're too far away. We're too far away. But right now, my opinion is we have more interest rate hikes to go. The Fed mandate probably needs to be revisited as far as that dual mandate, because they're not focused on the market at all, which is where many people have the vast majority of their wealth now. So maybe we should be looking at some of that, right? And the funny thing is we put this topic out there on Wednesday prior to Powell announcing. This was Wednesday morning we did this, right? Just getting all the emails and everything ready for this week for class today. So we picked a great topic, but maybe it wasn't as hard as it sounds, because what did we do? We had set up in there that, como se llama? Yeah. Let me leave that for now. I don't want to go there yet. Let me leave that for now. We'll make that a topic for another week. All right. But right now, what should you be looking at? Short-term trades, focusing on what's going on, economic reports, major economic reports, CCI, PPI, PMI, Purchasing Managers Index, the GDP, housing, unemployment, things that can drive the economy. And if you're trading around those, be cautious. Even if the news drives them up in the morning, many times you see a pullback in the latter part of the day. All right. Let me go back and take a look at the questions that came up in there. I don't know how that opened up on my end there, Sean, but let's see. There we go. Yeah, congrats on 26 years. I'll always remember the tires, Charles, no question. Let's see. Trader World macroeconomic supply and demand. There you go. I think breakfast is awful on price. Yeah, everything. I mean, it's just food. Everything is crazy. Brandon said, if everyone went back to just cooking at home, growing your own fruits and veggies, slaughtering your own cows, and raising your own chickens, I would love to. We can't raise them in Nassau County. It is against the law. The greed would decrease a lot. I think there's a lot of other things that would decrease a lot too, but Tripp said it is, for now, 59% chance of no raise, 40%, 41% chance of a 1/4 point. Still early. Yep, you're right, Tripp. Good appreciation there. Yeah, move to Daniel's farm. Exactly. or Robert with his microgreens, and some of our inner circle members. But all right, ladies and gentlemen, Miguel, do me a favor, drop that link in there again, please, for Key to Be Free. Drop that link in there for volatility, which is this evening with Sean Reed. Guys, Sean's putting on a special class that was not scheduled, right? This just came up now. If you came in late, it just came up now, and you want to check that out, take advantage of it. Just to give you an idea of what he's doing, right? Sean has a morning training now that he does, Vegas Spread Mastery, right? Let me see if I can. There we go. Come on, where is it? Right there. Vegas Spread Mastery, Monday, Tuesday, and Friday. Okay? 3 days a week. Monday, Tuesday, Friday. It's 2 hours each day, each of those 3 days. And inside of that training, folks, had you follow along with him within the first month, you could have paid your entire year of being in Vegas Spread Mastery with 1 month of what he did, right? And he puts every one of these trades on. They're all non-funded, of course, but he enters every one of them and manages every single one of those trades. So go and check out what he's doing. Let him teach you how to focus on Vega volatility rather than focusing on theta, which is time value. All right. Let's see. Yeah, I love when that happens. Exactly. Well, appreciate that, Helen. Jim said FOMC rate hike this morning. Looks like we're a possible moving quarter point. Yeah, we're going to see how it all runs, right? We'll see how it all goes as we get closer. Like I said, 6 days left until that. So we're good to go there. All right. Hey, ladies and gentlemen, I appreciate it. You all have a great day. God bless. And I will see you at our next update. All right. Bye for now.